Right, good morning everybody. Apologies for the late start. All right, let's get to it. The S&P traded mixed, made a continued sell-off in Treasury bonds. We saw the yields of the 10-year Treasury note trading to an 8-month high of 2.45% and yields on the 30-year bond climbing to 3.18%. So it looks like the expectation for yields to rise in the States is continuing. We had US job openings, which jumped to a record high, which obviously quite a bit better than expected, 5.376 million, beating estimates for only 5.04 million openings. And then we also saw crude oil rallying over 3% to up to $60.38 per barrel. So we're up this morning again, another 1%. So things looking pretty bullish for oil price. US Energy Administration forecasts lower oil production in the coming months. In Asia this morning, a bit of a mixed bag. We got the Hang Seng up almost 1%, Tencent up 0.65% or 0.58% right now. So you can maybe expect a bit of a bounce out of Naspers. It was a bit of a weak day out of Naspers yesterday. We had the Shanghai, another volatile day out of the Shanghai. Ended up closing just a little bit negative. Same with the Kospi. Aussie up a little bit with Rio, Billies and Rio I think up a little bit as well. And the Nikkei down just 0.25%. Chart of interest, basically just showing that in previous periods, between 2010 and 2011 and around 2012 when they took QE off the table, we saw some really big pullbacks. The one in the 2010-11 period was 15% and almost 20% in the next one in 2012. But it seems like that has, the stock market, as the heading says, the stock market seems to have gotten over its addiction to QE. So it's showing that the pullbacks haven't really been coming now that QE is off the table. So obviously rates will be rising now, or looks like the expectation of rates rising is coming, and it doesn't look like we're getting that massive sell-off. All right, Peregrine came out with earnings this morning, 271 versus expected 264. Revenue also beats 264 versus 228, and the dividend 150 versus the Bloomberg expectation of 120. So it looks like it's blue sky for Peregrine over there. This morning we had machine orders out of Japan, which were better than expected. We had Japanese PPI as well, slightly better than expected. 10:30 we've got UK industrial production, manufacturing production as well. At 1 o'clock we have US mortgage applications out of the US. 4:30 US crude oil inventories, and then Chinese money supply. I'm not 100% sure what time that comes out. All right, let's jump into the maps quickly. The first one I'm going to show is the Aussie. So we showed yesterday we took out that 45,600 level, really important level technically. We closed around 45,400. We've had a little bit of a bounce this morning. I think we kissed that 45,600 level, and it looks like we're pulling back a little bit, currently at 45,550. I think it's a pretty important day for the Aussie today. As I said, we have a reasonable strike around that 45,000 level and at 44,000. So the closer we get to that level, the more volatility we're likely to see. Also, we've got closeout coming next week, so I think it's pretty likely that we're going to get some volatility going into that next Thursday. The next one I was going to show, I showed this one yesterday. Billies, if we jump to a 30-minute chart. Spending a lot of time yesterday, it really went through that 250 level that we were looking at, and above and back below and back above. I think it closed right bang on that 250 level. Continue to watch that level today. It's going to be an important level. Billies, as I said earlier, Billies and Aussies up a little bit, so maybe it can get some support there. I think Anglos took out in London. It took out that really important £10 level. So it looks like a little bit of weakness in the diversified mining space. Continue to watch those levels in Anglos and Billies. All right, the next one I was going to show is CFR. So CFR, we've been looking at this 105 level. It's been a really important level. You can see how many touches we've had on this level. Things were looking really, really good at one stage. For a proper turnaround in the stock after being sort of an underperformer for so long. But we really failed it yesterday hard. You can see this 105 level we broke down, closed just below on Thursday and Friday, but really, really came off hard yesterday. We got another stronger rand this morning, so unless CFR can trade well in Switzerland, we might be testing this lower trend line, which comes in at around 170. I mean, obviously 100 is a bit of a psychological level as well. 200-day moving average comes in right here as well. So perhaps if we can get a nice reversal of this trend line, we might see it go test the highs again. But until that happens, it's probably a no trade. All right, Discovery. So Discovery, we broke down from this bit of a skew head and shoulders. Looked like quite a bit of a lower target. It's obviously one that a lot of people like and probably are still long of. We've been flagging a little bit for the last few sessions, for the last week or so, but yesterday we put in a big red candle again. So looking like a test of this 200-day moving average at around 114 is very, very likely, especially if we get a little bit of pressure on the market. The full target from this head and shoulders breakdown is quite a bit lower though. We're looking at about close to 100, between 100 and 105 as a target. I'm not saying it's definitely going to get down there, but there is likely to get pressure in the short term anyway. Again, it's one that's been an outperformer, still in a good uptrend. We probably want to be looking to buy it once the market's settled down a little bit and it shows a bit of a reversal. Impalas. Okay, Impalas, we had this big bounce up. Percentage-wise, it was quite a big move in a short period of time. Was trading really well, and then over the last few sessions, it's had the slow, well, not when I say last few sessions, last few weeks, it's had the slow bleed downwards again, back getting very close to testing the lows. The closing low was around 58 rand. I think yesterday we closed just above that. So keep an eye on this level. Obviously, once these commodity stocks make new lows, generally they tend to carry on a bit lower. And if we had to measure the height of this this channel, it is percentage-wise quite big as well. So 58 rand, keep an eye on Impalas, it could be going lower. And the last one I was going to show is Old Mutual. So Old Mutual, another level we've been monitoring, especially on the Storm Twitter site. There's been quite a few posts there on this 40 level on Old Mutual. We tried to put a bit of a reversal off that 40 level on Friday. But like a lot of stocks on this index, they've just sort of failed those reversals, and we are heading lower again. There's not a lot below this level to be honest, apart from the 200-day moving average, which is quite significantly lower than where we are now. So best to be avoided until we see a nice reversal off either the 20-day moving average or the market turns around. And that's all for today, guys. Good luck trading.
That's key.